Hi everyone, welcome to my YouTube channel, The Cyclical Trader. My name is Akash, and today I'll be discussing two topics. The first one is about distribution, and the second one is about weekly moving average crossover. So let's discuss about the weekly moving average crossover. I personally use 20, 50, and 200. I'll keep 200 moving average aside for now. I'll just discuss 20 and 50. You can use any moving average you want. Some use Fibonacci number, some use any other number based on their inferences or observations. But the main point is you need to understand the structure based on those moving averages. So I personally use 20 and 50 WMA for bigger time frame corrective or bullish cycles. I'll first demonstrate on this screen, and after that I'll show you examples and how to trade with them, how to make a view out of that. So let's say this is my 20 MA and this is my 50 MA. Now this is a very crucial point for any trend follower. This is a very crucial point. I'm talking about positional and not talking about intraday. So most of my views are usually positional, like with a time frame of 3 or 4 months, or sometimes even with 5 or 6 months. So let's not go into the day-to-day movements, but for the positional moves. So this is my 20 WMA and this is my 50 WMA. I've just drawn a rough figure. This was the point from where trend originated, and after that one point came where both these moving averages had a crossover. Now there are always two situations associated with this kind of structure. The first thing is obviously the usual one is, let's say the price was going like this and it has turned into a corrective mode. So this is one pattern. The other one can be the price was going like this, it has gone into corrective mode, and then again one quick swing and again back to somewhere over here. Basically a decent retracement of this last rally. So currently we are in that kind of a situation right now. We actually don't know. I personally don't know if this is a real bull market or if this is just another bear market rally. So for this time being, I have two views as of now. So basically, what happens is when this 50 moving average flattens out, it has always two chances: either to go flat and keep it course for the newer bull market, or it can go like this. This 20 MA can go like this, and after that they again make a crossover, this price retest somewhere over here, and then a new bull market starts. This is a very standard pattern. Both these are very standard patterns which happens. Now I've told about these structures and possibilities. Let's look at the few examples in the screen, basically on Nifty itself. So let's look at the weekly chart of Nifty. So we are in the similar kind of situation right now as I discussed earlier. So we are in the retest zone. We still don't know if this is going to break out or if this is again going back to maybe 100 moving average or 200 WMA. We are not very sure about it. So that is why I'm keeping two possibilities open. The first one is, okay, let's make a new high, maybe till 19,000 or 20,000. After that, we can make a retest of this moving average or a little deeper. And after that, we can make a newer, we can have a newer bull market. Now let's look at certain occurrences, this kind of occurrences which have happened earlier. So the very obvious one was 2015, 2016 corrective phase. So that was a very standard pattern. As I discussed earlier, it goes into sideways or a little corrective mode, and then we see a retest over here, and after that we see a move towards 200 WMA. Usually this kind of this retest occurs when price bounces back from 100 WMA. So that is again very standard. It's not unusual. Happens in daily and weekly time frames both. So it happened here as well. It went from 100 WMA, made a retest over here of this crossover, and then again price fell back to 200 WMA. So that is the end of a simple correction. And let's say probably this is not happening, and maybe this corrective phase is very small, and this kind of thing is happening. So I'll just wait for this particular retest to make fresh entries. If someone has missed out this entirely, I also being the one who missed out majority of the rally. So in that case, I'll just wait for the retest to make low risk entries. I'm not very comfortable in breakouts, especially when the overall trend is still down. I'm not very comfortable in breakouts because that has deeper stop losses. So I'm usually comfortable with max to max 5% of stop loss. That is how I trade for even for the positional ones. So I'll just wait for a few weeks or few months if rally keeps on extending. Now let's look at the other occurrence when this has happened. Now this is the second case where this has happened. It again same kind of thing. It kind of bounced back from 100 WMA, retested over here, and then fell back to 200 WMA. Very standard pattern, and I think almost it was the end of correction. Now, where else we have seen this kind of pattern? Now this one is interesting. Here, this kind of crossover happened of 20 WMA and 50 WMA, but this didn't sustain and it again went back up. So what interesting thing is about this one is the slope of 50 WMA didn't go even flat or negative. In both, in earlier cases, it went negative or to flat, but in case it was already moving up. So we could have made a guess, but still, when we are in this position, we are always biased towards the shorts. So let's not consider that possibility. Okay, we would have considered long over here. Most of us would have been confused over here. Okay, if we have to go long or we have to go short or not. So again, simple entry point is this one only. If you have missed out on this entire rally, then simple entry point is this, and you still have a long way to go if a real bull market is ahead of us. So similar kind of situation right now we are having. So no one is really sure if this is a new bull market or if this is just another bear market rally. So what we'll do, we will just wait for a decent pullback over here. This 50 WMA became flat earlier, but now it's slightly turned positive, and we might get biased for the bulls as of now, and we'll just look for the retest opportunities. But the other possibility is still there that maybe this is just a shakeout or this is just a bear market rally and we are heading towards maybe 100 WMA again or 200 WMA. So that is the worst case, but we have to keep both the possibilities open as of now. Now let's look at other examples for the same. So this one, the crossover happened, 50 WMA flattened out, and after that we saw a retest and again move back towards 200 WMA. So we have multiple examples for this one, and we see that the odds of correction and the odds of this being a bear market rally is higher rather than a bull market rally. So although the odds are in favor of bears as of now, like for this being a bear market rally, the odds are in this favor. But still, being an unbiased person or being an unbiased trader, one should consider that this is a bull market rally. We'll look for retest and we'll look for buying, or we'll just wait for some entry points over here, like a pullback or a decent fall to make the fresh entries. So this was about the moving average crossover concept. Now I'll talk about the other concept of distribution, how to identify distribution and what are some unique distributions specific to a particular market. Now a very peculiar thing about this particular market is most of the rallies end up being parabolic. Either it's a bear market rally or it's a bull market rally or it's a fall, even a fall. Most of the things are ending up being a parabolic move. So after that, there are two types of moves through which we can identify the distribution patterns. So I'll talk about the bull market rallies or the bear market rallies, basically the bullish rallies. So what usually happens is they'll go like this, or and after that peaking up and a certain fall, and then goes sideways, or a little upside, or sometimes downside, and then after a spike, the usual fall starts. This is a very standard corrective pattern which has been observed in this particular market. Now, how to identify this is a breakout or a freakout? Like this is a new bull market starting for this particular script or index, or this is just the starting of the stage 4 correction. So what happens is whenever a fierce rally is happening, the consolidation time is usually very small. So you can clearly observe that in any stock, be it metal stocks, be it IT stocks, you can clearly observe that the consolidation part is usually very small. But once the consolidation part becomes usually long, then you can clearly say that this is the last or second last stage of the correction of the rally. You can definitely make an exit in this breakout. It might extend further few percentages, but still, such kind of consolidations are not good in after a fierce rally. That usually leads to stage four corrections. So what kind of patterns should we look for is sometimes they'll make the rising wedge. The first fall is usually deeper one, and after that this kind of rising wedge, or you can just look for the sideways move. But remember that this should happen after a fierce rally, like previous high is some is somewhere over here, and after that non-stop rally is there. After that this kind of consolidation, long consolidation is happening, then only you can say that okay, this is a kind of red flag for me. So it can happen in either channel or rising wedges or just sideways or a little spike after that. So this kind of patterns usually happen after a fierce rally in a bull market. So this particular patterns these particular patterns have been very common in current bull market, because current bull market was actually a vertical one. It was not like okay, we'll go back 200 moving average, 200 moving average. It was not like that. It was just continuous one way up, and after that these kind of patterns. So the first set of patterns were observed in metal stocks. After that we saw it in many other stocks, some in IT stocks, and after that in textile stocks. So we saw these kind of patterns in many stocks, and most of them went in stage 4 correction pattern. Now it's a simple phenomena that if one thing is happening in stock market, then probably it keeps on happening for a certain period of time. So basically I call it observation alpha. So basically you observe one thing which is repeating again and again in a particular kind of market. It's not like it has happened historically and with a good accuracy, but for particular market like this one market, it has been happening repetitively. So this kind of thing has been happening in current market. So Nifty is in similar kind of phase. Initial corrections were very small, very small, very small. The consolidations or corrections were very small. Now the consolidations happened from mid of October, and now it's already August. But still the price is in sideways movement. So probably my bias being bearish is because this has happened in many stocks, like it happened in SAIL, in Copper, Happiest Minds, Global Spirits. Many stocks are there which has happened. This kind of thing has happened, and now this is happening in Nifty. So move is still sideways. We cannot say that we are in a really bull market. So what best can happen is we can see one more spike, and after that stage 4 correction. This is the best thing for investors to make an exit at this point of time. But I can definitely say that one decent correction is still pending because of many other structures and because of these data points. And we also know when to become a bull, when to negate this possibility. As of now, it looks like heavy on the bearish side based on both historical correlations and the kind of things which has been happening in the current market. But let's not be biased. What if it stops just here after this making a new high? Then we can definitely look for newer bull market. So this is my overall view for now. I'm really confused if this is going to be a new high or if this is going to be a decent correction. I don't know, but this is how I'm looking at it. So I'll be just waiting for one pullback to make a clarification if this is a new bull market, if this is starting of a new bull market, or if this was just another bear market rally. So thanks for watching. I'll be adding contents like these only. My views are mostly positional, so I'll be making videos for positional only and not for intraday and any sort of that.